So from a daily chart, today marks the opening of a new month. Okay, new month, new power of 3. This is for the month of May. So obviously we have a new 3-month look back range. For to analyze this range, right, and see the profiles of the previous months, we can see that February here was a swing to Z profile, right, followed by March being a range to expansion profile, and then obviously the reversal in April, right, being a classic buy month. And so since the month of April here, obviously key time of the year, right, as it's the open of the second quarter, right, and the fact that it created a reversal, obviously we have very good narrative to assume that the low of the year is in. So far the market since the current low of year has expanded about 20%. So if this is going to be a classic buy year at these levels, I think that we have at least another 20% to go get from these levels, right? And the current standard deviations now, it's debatable if these are the right ones or not. Maybe you can have these levels, right? Overall, I believe a good target for the year is 30,000 big figure, somewhere around that range, right? This would be a rally of at least 30%. I'm not saying it can go higher, right? But I believe that this is the, quote unquote, the low hanging fruit target for the yearly profile. If we look at the previous month, right, so the month here of April, viewed from a monthly chart, obviously we got a big up close candle. Okay, so price has expanded, right? What's likely to happen from these levels based on the narrative that we have, right? The higher time frame narrative obviously being bullish. After expansion comes either a phase of consolidation, right, or a phase of retracement to then continue higher. One of the other, consolidation to trade higher or retracement to trade higher. And so, right, we can use the fractal concepts inside of this monthly range, right, and seeing if there's any fair value gap of interest located above 50% of the range, ideally next to 25% of the range. If we look on the weekly chart, right, we can see that we obviously have a very large one cutting through 50% and 25% of the range. If not, if price will be really bullish in May still, right, it could revisit this fair value gap, okay, which is the one that's being created at the moment with today being the last day of the week. And so the closure here of this week will be important, right? Do we see some kind of closure where today Friday comes back in the range, and on the weekly we're left with some kind of doji, or at least some kind of wick left at the highs after the manipulation was done at the lows? If that's the case, then that can be good narrative for price to come back inside of the range, right? I'm talking in terms of a monthly profile at these levels, right? Say the first week or the second week of the month of May to come back inside of the range, sweep the low of this week, right? Create the monthly low, and from those levels keep trading higher. If this week, on the other hand, as a closure, say at these levels, so a strong closure, this gap can stay open. It can stay open even if there's a doji, okay? Price could simply consolidate at these levels to then trade higher, but personally I'm going to want to see some kind of divergence to be able to trust with high probability that the low of the month is in case of the week closure this week. So will be interesting to see the closure at these levels, right? Will give us some information for the first week of the month of May. What's likely to happen, right? And on the daily chart, obviously order flow remains bullish. We can see that, yes, today did expand, although we're not talking here about a classic buy type of profile. Okay, we'll look at the profile when we look at the hourly and also what it left behind. But overall, you can see that the daily order flow remains bullish. Price keeps respecting order blocks. Price keeps respecting fair value gaps, right? So no reason to be short on a higher time frame perspective so far, right? We cannot assume at the present moment that the market will want to retrace all the way down inside of these fair value gaps because the order flow remains bullish. Okay, so key discount level for tomorrow, we have here the range of an order block. Okay, this here is an intermediate term low on the lower time frames, because it revisits the low of a bullish fair value gap and closes it. Right, and today created yet another range of order blocks inside of the daily. So in terms of discount arrays, you can grade the order block itself, right? This should be enough to be able to gauge a narrative and the profile in the moment. Personally, I don't mind using the wick of Monday still. Okay, if price is bullish, I believe that it should create a low of day around these levels. I wouldn't want to see price disrespect this wick, right? Because then again, coming inside next week, then I believe that we will have narrative to look for the development of the low for the month of May to form. Okay, so important rejection block, right? As you see, the market had found initial resistance in it, right, on Tuesday and Wednesday, and yesterday displaced the range. And what we'll see later on the lower time frames is that the PD rate of interest formed inside of yesterday also cuts through this wick. Okay, so still an important level relative to discount. In terms of premium levels, I mean, the market already gapped up above, right? So this would have to be something intraday. We don't have a divergence between highs here, so it would have to be some kind of divergence between sessions intraday in terms of premium levels to see price come back inside of the range. Today also could create here a daily fair value gap, right, through an order block. So this will provide good opportunity if the closure of today is not so bearish to see next week, use this fair value gap to trade higher, or at least to create a range around these levels. Okay, so discount area of interest, we have a bullish order block, and we have a bearish rejection block, right, now turned bullish, right, price displaced through it. So if ever this range were to get revisited, this can be a good area in discount to see the low of day form. On the 4-hour chart, yesterday came a couple ticks short from the order block of interest for the week. Very choppy here intra-week, as we can see. But right, what did yesterday leave behind? Yesterday left behind a large wick at these levels, right? So the wick high, so initially this was a rejection until price came lower, created a divergence at these levels inside of discount to then displace the wick high, right, this initial rejection, and by doing so creating a 4-hour bullish order block. Okay, so we will refine these levels when we look at the hourly chart, but if you have a side chart just for a side layout simply for the 4-hour chart, I think that these are relevant quadrants that you can keep on to identify a trade in the moment, right, or to identify where price comes from, right? How did price trade around the quadrants of the wick high of this bullish order block? If we look at the hourly chart, okay, so we're now looking at a 3-day look back perspective. If we can cover yesterday's profile quickly, we're looking at some type of seek and destroy profile. price trading to the highs, creating a divergence, price trading to the lows, creating a divergence, price coming back in the range, creates a divergence, price comes back to the lows, creates a divergence, and finally ends up displacing the range. Right, so very obvious PD array left behind by the range of yesterday, right, in the final phase of expansion in the PM session. We can see that the market left behind here a bullish fair value gap that cuts through the range of an order block. Okay, so this here is the key PD array to have marked out. Right, you want to have these levels marked out on your chart at all times. Every time price trades around these levels, either for a bearish scenario or for a bullish scenario, right, you want to see how price trades around these quadrants. This is a very good area, okay, for price. If price will be bullish today, if we're going to see a continuation higher, very high probable area for the low of day to form. Why? Because not only does the fair value gap cut through the order block, but we can see that this fair value gap is created right at 25% of the previous day's range. Okay, so very important fair value gap at these levels. You want to have this PD array marked out at all times on your chart. If we look at yesterday's profile, right, we just covered it, so some type of seek and destroy profile, consolidation followed by PM expansion. Okay, that's the characteristic of seek and destroy profiles. You know, just like it did here at these levels, right? This was a profile of Wednesday. And if we look at what was the PD array of interest for the day here of Thursday, obviously we had the bullish order block related to the earnings. Right, then we had also the breaker, which at the time here of Thursday was part of the 3-day look back range. So this old breaker, right, that ended up becoming a reclaimed order block. Right, and what I talked about in yesterday's outlook was to have these levels on your chart at all times. Right, and what you can see from yesterday's profile, you can see how price trades very accurately around these quadrants. Right, at first displacing through it at the open, reaccumulating at the high, displacing away from it until structure breaks, right? And we can see price displacing through the high of it, coming back to 50%, reaccumulating around 50% in the upper half, trading to the lows, using the low now as a bearish breaker, trading lower from here, then structure ends up breaking, right? And now you can see it gets used as a reclaimed order block. Right, you can see how accurately price trades to these levels. Okay, that's what I'm saying when I point out that a PD array is very important that you keep it on all day. Okay, because sure, there's some times that the market will simply revisit it once and then New York opens at these levels and it never comes back to it. But you never know that you're going to get some type of profile like this. Right, and if you do, well, that's where it's very beneficial to have these levels at all time on your chart and to trade right based on what the current power of 3 that you're trading. If the order flow is bearish or bullish, right? Ideally, you want to be lining up your trades with the quadrants of the PD array of interest. Right, you see pre-market accumulating longs in the quadrant, right? Accumulating longs in the quadrant, and then structure fails, right? The structure breaks here at 9:30. Price uses the lower quadrant to accumulate shorts, distributes lower, uses the low as reaccumulation of shorts. Price breaks again, right? Consolidates around 75% and 25% of the range, right? Until it eventually breaks out, revisits the upper half, and from those levels expand towards buy-side pools. Okay, so now it's not that this level is not relevant to the range anymore, just it's not part of the 3-day look back anymore. And the market has left something very significant at these levels. Okay, fair value gap at 25% of the range that cuts through an order block. So this will be very, very important for the day. And again, if price will be bullish today, very good candidate to form the low of day. So main discount array of interest, okay, if this level is broken, anticipate that it will be used for shorts. Or if this level is broken for the market to trade, okay, say towards the low of the 1 p.m. hourly candle, which has no wick, right? If from those levels price breaks, now price will reuse the quadrants of this fair value gap as a reclaimed fair value gap. Okay, throughout the day, it could use it as inversion to then use it as reclaimed. And I was talking on the daily chart about the rejection block at these levels, right? And we can see that if we put up the quadrants of the rejection block of Monday at these levels, well, what we can see is that this fair value gap cuts right through 50% of the rejection block of Monday. Okay, so very, very, very important fair value gap for the day. Look, if price is extremely bullish, it could leave it as breakaway. It could leave it as breakaway in the form of both ES and Nasdaq trade higher from these levels, okay, create displacement, create order blocks, and this just never gets revisited. Or it could be through a divergence, okay, one trades into it, the other doesn't, right, and this creates a low of day. Again, I was talking on the daily chart before that, we don't have anything on the left side at this point since price gapped up to to identify premium arrays. So this would only have to be done during the day. If we see something significant such as a session divergence, could be with London, with pre-market, could be with the opening range. Right, and say price keeps expanding from these levels, and then the SMT happens, right? The divergence happens, followed by a break of structure, right? A couple fair value gaps. Well, then this here can be a great low-hanging fruit target, right? Aside from the open, okay, profits can be taken at the open, but that's in the case that price were to expand from here before revisiting the discount level. Okay, so very important fair value gap here. Keep these levels on your chart at all times.